What's going on with Carvana stock? The stock price soared from $8 per share all the way over $10 per share in early morning trading today, March 22nd, before coming back down to around $8.60 per share as of this recording. But it's still much higher than the $8 per share the stock started at to begin the day. Now, there was some real news behind this price change. This wasn't just a hyped up bubble trade where a bunch of investors just jumped into the stock and the stock price increased. There was some real news behind it, and that was that Carvana filed a Form 8K with the Securities and Exchange Commission that gave some key insights into what's going on with the company right now. So in this video, I'm going to dive into this Form 8K and really break it down for you, the investor, and highlight what it means for Carvana stock. So stay tuned. You're not going to want to miss this. Let's get right into it. Carvana filed this Form 8K, and one of the things that Carvana is doing is on March 22nd, 2023, they announced the launch of offers to eligible holders of its bonds, right? So Carvana has a lot of debt on its balance sheet. That's been one of the reasons why the stock price has came down significantly off its highs, even though it's been up in 2023 and it's had a lot of fluctuation. But if you look at the long-term trend, Carvana stock price is down significantly off its highs. And one of the reasons is that it has a lot of debt on the balance sheet that it's going to have a difficult time paying back. So this helped alleviate some of those concerns. Carvana entered into a deal where it's going to exchange some of its debt that's coming due in 2025, in 2027, in 2028, and in 2029. And it's going to exchange those for senior secured second lien notes that are going to be due in 2028. But the key thing about this is the interest rate is going to be higher, yes, at 9% compared to, let's say 5%, 5.5, 5.8, 4.8. But it also is going to give the company the option to pay, if it pays cash interest, it's going to pay 9%. But it can also do a payment in kind, PIK. And if it chooses to do a payment in kind, the interest rate will be higher, but it'll give the company more flexibility in terms of how it chooses to pay back this debt. It doesn't just have to be cash. It can be something else. And that flexibility is really what Carvana needs right now because it's struggling to pay back its debt. It's struggling because it's losing a lot of money on the bottom line. It's got a lot of inventory that it's having a hard time selling through. So this flexibility in terms of how it pays back its debt is really good news for Carvana stock, and you could understand why the stock price jumped as it did when this announcement came out. Now, the company also gave some more information to investors about its quarter that is ending on March 31st. Of course, the quarter is not over yet, but it's giving some estimates and update along with this 8K that also pleased investors. So for the 3 months ending March 31, they expect retail units between 76,000 and 79,000 sold, compared to 105,000 sold in the same quarter last year. Okay, so a big decrease in terms of units sold. That was to be expected. The company's been experiencing decreasing year-over-year sales for several quarters now as consumer demand for used cars has come down considerably due to rising interest rates, reopening economies, and folks that want to spend money on other things and not used cars. So additionally, they expect sales for the 3 months ending March 31 to be at 2.5 billion at the midpoint, compared to 3.5 billion in the same quarter last year. No big deal. Investors were already expecting a decrease in terms of sales, in terms of units, in terms of revenue. Okay, so no big deal with that. But here's the positive thing. The change in gross profit, the company for the 3 months ending in March 31 expects non-GAAP gross profit to be 310 million and between 310 and 350 million, compared to just 314 million in the 3 months ended last year. So an increase in gross profit. So that's good news. The change in that is primarily driven by total gross profit per retail unit. That's offset by lower units sold. So that's really good news. They go on to say that they expect total gross profit per car to be between $4,100 and $4,400. That's compared to just $2,985 at the same time the last year. So the total gross profit per car is expected to increase by roughly 33%. That's really, really good news. This is what had the stock down so much to begin with, was the fact that this gross profit per car was falling so much, right? And that's their entire business, right? Buying and selling used cars. If they're getting worse and worse gross profit per car, that means that core business, the real reason why the company's in business, is in question. But now that that's turned around and it's back to rising, that's really good news. That's really good news for Carvana stock investors, and I can understand why the stock was rising on the back of this news. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Additionally, the company's done an excellent job of controlling costs. They expect SG&A non-GAAP between 400 and 440 million in the current quarter that's ending March 31. That's compared to 662 million in the same quarter last year. So they're decreasing costs by roughly 33%. So increasing the margin per car, decreasing their expenses, gaining more flexibility in terms of their debt, all really good moves by Carvana management to really offset and delay these risks that the company's going to run out of cash, and it's going to really need to put these cars on fire sale and lose a lot of money on each car sale. So what essentially this report, this filing with the SEC has done for Carvana stock investors is bring risk down meaningfully. Bring risk down meaningfully. And if you're investing in stocks, one thing to keep in mind is that stock prices will go up when risk goes down. So even if everything else stays the same, there is no increase in profit expectations. Even if it's only risk that came down, then the stock price should theoretically increase, because investors are willing to pay more for a stock that has lower risk than they would otherwise would be if it had higher risk. Right? That makes sense. If you have more certainty about the returns of this investment, about the returns of your capital, you're willing to pay more for an investment because it's safer, right? We all want our money to be safer, right? We want the risk of losing money to be lower. If we're going to risk money, we want the subsequent return to be higher. So if we have the same potential return at a lower risk, well, that's gravy. We like that, right? So that's one thing that happened with Carvana stock. The main thing that happened is that risk was lowered. Risk was lowered substantially. And then to have the icing on the cake, the potential profitability also increased as well, with the gross profit per vehicle increasing. So really good news out of Carvana stock this morning, and I can understand why investors were excited about this, and I can understand why the stock price jumped as a result. All right, so that's all I've got for this video. I hope that shed some light on what's going on with Carvana stock and why everyone is talking about it. And if you like this video, I've hand selected a few videos that are popping up on your screen right now that I think you will enjoy. So please click on one of those and I'll see you over there. Thank you for watching.